In 48 hours this week, 3 walls came down that have been blocking institutional money from crypto derivatives for years. CME Group launched 24/7 XRP futures. The CFTC approved regulated Bitcoin perpetual futures for the first time in U.S. history, and the SEC and CFTC signed their first ever formal cooperation agreement. These are not 3 separate headlines. They are 3 pieces of one structural shift. And XRP sits at the center of all 3. This is XRP Verified. Let us get into it. Let us start with CME. Most people are underestimating what this actually means. CME Group is not a crypto exchange. It is the largest regulated derivatives exchange on the planet, the institution handling futures on oil, gold, interest rates, and currencies, the backbone of global financial markets. When CME moves, traditional finance moves with it. For years, there was a structural disconnect traders called the CME gap. Crypto ran 24/7.
CME futures closed on weekends. Prices would move Saturday and Sunday with no institutional counterweight. Then, Monday morning would arrive, and futures would snap back, often violently. Every experienced crypto trader has watched that pattern dozens of times. That gap is now permanently closed. CME confirmed XRP futures, micro XRP futures, and round-the-clock access for institutional players who previously had to sit on their hands every single weekend. Their crypto products have already generated over $3 trillion in notional trading volume. That market now never closes. The deeper point: institutions were not absent from weekend crypto markets because they lacked interest. They were absent because regulatory and structural barriers prevented engagement. Those barriers are now gone. That is not a convenience upgrade. That is a fundamental change in who can participate in XRP price discovery and when. Now the CFTC, because what happened in Washington this week operates at a completely different level. The Commodity Futures Trading Commission regulates derivatives in the United States. Futures, options, perpetual contracts, the instruments that make up the largest financial market in the world. This week, they approved Bitcoin perpetual futures on a regulated U.S. exchange. At the same time, they cleared the path for American customers to access global crypto options and perpetual futures, including platforms carrying over $31 billion in Bitcoin options open interest. Here is the real translation. Derivatives drive 80% of global crypto trading volume. 80%. And Americans were excluded from most of it. That exclusion is now ending. CFTC Chairman Sieg was explicit. The era of regulation by enforcement is over. The approach that pushed builders out of the United States and left American investors underserved is officially reversed. President Trump backed the CFTC directly, calling crypto a major industry that must be protected. The regulatory culture at the top has shifted completely. Now, here is the development most coverage this week completely missed, and it is the most significant for XRP specifically. The SEC and the CFTC just signed a memorandum of understanding, a formal binding commitment between 2 of the most powerful regulatory agencies in the United States to work together on crypto policy and regulatory frameworks. These 2 agencies have historically operated in silos, sometimes in direct conflict. The turf wars between them caused years of legal uncertainty for every company building in this space, including Ripple. That turf war is being dismantled through an initiative called Project Crypto, led by SEC Chairman Atkins, to harmonize both agencies under one framework. Why does this matter for XRP specifically? XRP's regulatory future has always depended on clarity from both sides of that fence. The SEC battle Ripple fought established XRP is not a security. The CFTC's position has historically been that XRP is a commodity. When these 2 agencies formally align, the regulatory fog surrounding XRP clears completely. Institutional capital can then move into XRP with full compliance confidence at scale. JP Morgan is already hiring global research analysts specifically focused on crypto derivatives and digital asset integration. These are not exploratory hires. These are infrastructure hires. The banks are getting serious right now. Now, let us put the bigger number in perspective. $850 trillion. That is the current notional value of the global over-the-counter derivatives market, up 16% from the year before. This market is opaque, slow to settle, expensive, and error-prone. That is exactly the problem blockchain settlement was designed to solve. Not replace the derivatives market. Settle it. Make it faster, cheaper, and transparent. Chainlink published analysis putting the total addressable market for blockchain-based derivative settlement at $1 quadrillion. That is the existing market if it moved on-chain. The total tokenized asset market today is approximately $30 to $40 billion. The gap between 30 billion and 1 quadrillion is the largest financial opportunity in the history of markets. And the infrastructure to close that gap is being built right now. The DTCC, which processes approximately $2.5 quadrillion annually, is working on tokenization infrastructure with Ripple Prime, Chainlink, Stellar, and Canton confirmed. July soft launch is weeks away. October full-scale deployment is 5 months away. Now the roadmap for the next 12 to 24 months, because the sequence matters. CME 24/7 trading compresses XRP volatility and improves institutional price discovery immediately. The CFTC Bitcoin Perpetuals framework sets the regulatory precedent. XRP perpetual futures on regulated U.S. platforms is now a matter of when, not if. When that happens, trading desks and hedge funds that currently cannot engage with XRP will be able to. The Clarity Act, passing this summer, removes the last legal friction point for U.S. banks to deploy capital into XRP infrastructure at scale. And DTCC tokenization, going live in October, brings real institutional settlement volume onto blockchain rails for the first time, with XRP Ledger positioned as the fast, compliant settlement layer inside the architecture. Let me bring it all together. 3 walls came down in 48 hours. CME 24/7 closes the institutional gap permanently. CFTC regulated perpetuals open the framework for XRP derivatives directly. SEC and CFTC cooperation resolves the regulatory ambiguity that surrounded XRP for years. JP Morgan is building crypto derivatives infrastructure now. The DTCC is activating tokenization with Ripple Prime inside the working group. And the $850 trillion derivatives market is beginning its migration toward blockchain settlement, with XRP Ledger positioned as the infrastructure at the center of that transition. 30 billion in tokenized assets today, 1 quadrillion total addressable market. The distance between those two numbers is the opportunity, and the when, this week confirmed, is now. Stay informed, stay patient, stay positioned. Subscribe to XRP Verified. I will see you in the next one.